All right, good morning, everyone. Welcome to today's Building Blocks of Success workshop on job costing and work in process. And once again, we are privileged to have Ms. Olga De La Rosa and Ms. Michelle Ringgold of Ringgold Financial Management Services. They are our management assistance consultants in IDOT Districts 1, 2, and 3, pretty much the northern part of the state. And we will kick things off with Olga. Thank you very much, Olga, for all that you and Michelle do.
Thank you. Good morning. Like Brian said, welcome to today's workshop for job costing and work in process. Today's workshop is being presented by Michelle Ringgold, President and CEO of Ringgold Financial. We are supportive service consultants for IDOT. So we're going to go over some housekeeping. So please make sure that you mute yourself and keep your video off through the entire presentation. We want to make sure that all focus is on the presentation and there are no distractions. You enter all your questions in the Q&A, not in the chat, and we will answer the questions throughout the presentation. This session will be recorded and provided to firms in a follow-up email, along with any additional helpful resources. And also there may be a short survey following the presentation, so please let us know how we can improve any ideas for future workshops. Today's agenda. So we've already gone through the introductions, housekeeping. We're going to go over IDOT's goals, supportive services and resources. We're going to jump into our presentation for job costing and work in process and do some Q&A and then closing remarks and evaluation. For IDOT's goal. IDOT's goal is to provide assistance to DBE firms and individuals interested in doing business with the department in ways that ensure equity, access, and transparency. IDOT, in accordance with federal guidelines, strives to facilitate and implement programs that can help current and future business partners open the door to doing business with IDOT. The department works towards this goal in a variety of ways, most notably through the tools available at our resource centers, the supportive services program that is executed through our partnership with consultants who provide management and technical supportive services assistance, and corresponding supportive services programs that fall under the umbrella supportive services program. This support is provided at no charge to IDOT's DBE firms, to firms seeking IDOT DBE certification, to Illinois UCP DBE certified firms who have an IDOT contract, and to prime contractors doing business with IDOT. We're going to go over the disadvantaged business enterprises supportive services. Brian Hendricks is the Policy and Supportive Services Unit Manager. His email is on the slide. Learn and grow with supportive services. While opportunities may increase for certified DBEs, it is not guaranteed. Free programs and resources support firms' goals at all phases of growth, which include develop technical and management skills, navigate operational expenses, connect with established firms, discover best practices for successful work with IDOT. Visit idot.illinois.gov to find your nearest resource center. Resource centers. Each of IDOT's 9 districts offers essential equipment and resources to conduct business with the agency. Some of these resources include computer access, internet, scanner, copier, printer, staff assistance, including support for DBE applicants. These resource centers are free of charge to all firms seeking to do business with IDOT. You can scan the QR code or visit idot.illinois.gov for a list of locations in your district. Contract compliance officers. Contract compliance officers are accountable for EEO and labor compliance on state and federally funded programs. They ensure contractor compliance with the state, federal laws, and regulations governing the EEO and labor compliance and DBE programs. Visit idot.illinois.gov and search for contract compliance officer to find a local officer in your district. The technical and management assistance. So ongoing assistance helps DBEs maintain a competitive edge. This assistance is complementary to IDOT's DBE firms or to firms certified in the Illinois UCP that are bidding on IDOT contracts. For the technical side, this includes estimating and bidding, equipment and resources, project site inspection, pre-qualification. On the management side, bookkeeping systems and credit restoration, bonding and insurance, business and strategic plans, and marketing. Our supportive service consultants for the different districts, there's different consultants. So for certification for districts 1 through 3, Theo Joyner from Ralph G. Moore and Associates. District 4 through 6, Melissa Hamilton for Synergetic Solutions. District 7 through 9, Mark Vaughn from FB Consulting. For the Management Services, District 1 through 3, Michelle Ringgold and myself for Ringgold Financial. I've included my information in the chats if you need to contact us for any of the management services for District 1 through 3. Melissa Hamilton, District 4 through 6, Synergetic Solutions. District 7 through 9, Mark Vaughn for FB Consulting. And for technical, Districts 1 through 9, Ronald Brown from Gonzalez Company. Workshops and events. The Borough of Small Business Enterprises brings innovative events to the public with 3 goals in mind. Share skills to become more competitive on IDOT projects, help individuals and businesses work with IDOT and form strategic partnerships, encourage sharing of best practices, policy, and procedure changes. Each district hosts events year-round to help firms do their best work with IDOT. You can visit the bit.ly DBE Workshops website. Today's Challenge, Tomorrow's Reward, TCTR. IDOT's annual Today's Challenge, Tomorrow's Reward conference provides opportunities for networking, skill building, and knowledge sharing among our vendor network. All firms doing business with the department, including primes and subcontractors, consultants, suppliers, and our various partners are welcome. Our last TCTR was in February 21st and through the 22nd. Our next one is in 2025, so we'll keep you posted on next year's date. Available programs. DBE reimbursement program. IDOT offers 50% reimbursement to qualifying firms in select categories while funds are available. That include association, organization, and membership cost, training or certification class, website capability statement or logo, and much more. You can contact the Borough of Small Business Enterprises to discuss criteria for these limited time funds. The Business Development Program. Qualifying DBEs can receive firm-specific guidance to propel their growth in the transportation industry. With this program, they can receive full business evaluation and analysis, tailored training that may be eligible for reimbursement, personalized recommendations to maintain competitiveness, how to apply. Enrollment opens once per year. 15 firms are accepted annually, and applications for 2024 will open up soon. You can visit idot.illinois.gov for more details. Mobilization payments. To account for the preparatory work and operations necessary for the movement of subcontractor personnel, equipment, supplies, and incidentals to the project site, and for all other work or operations that must be performed or costs incurred when beginning work, the contractor shall make a mobilization payment to each subcontractor. The mobilization payment must be made at least 7 days prior to the subcontractor starting work. The mobilization payment to the subcontractor is an advance payment of the reported amount of the subcontract and is not a payment in addition to the amount of the subcontract. Therefore, the amount of the advance payment will be deducted from the future progress payments. The amount paid is a percentage of the value of the subcontract shown in the table below. The HCCTP program. The Highway Construction Careers Training Program boosts participation of diverse individuals in the industry and on IDOT's highway construction projects. Illinois Community College partners offer training in industry, trade, and life skills, such as OSHA 10 certification, welding, forklift operation, first aid, CPR, AED, math for the trades, introduction to electrical, plumbing, sheet metal, carpentry, introduction to tools, and much more. Although employment is not guaranteed, participants do receive job placement assistance. 4 reasons why HCCTP graduates make ideal hires. They are well trained to fulfill entry-level roles, professional talent with diverse perspectives, eligible for work on IDOT project sites, and reimbursement via IDOT Training Special Provisions TPG. Who can apply for the HCCTP program? Eligibility is open to women, minority groups, and other persons from historically underutilized populations. Must be at least 18 years old, high school diploma, GED, valid driver's license, ability to pass a drug screening. We're just going to go over before we get started a little bit about Ringgold. Ringgold is led by our managing partner and president, Michelle Ringgold. We are an Illinois CPA and management advisory firm established in 2005. We are a certified DBE firm that combines three major disciplines: auditing and accounting, regulatory compliance, risk management, and management advisory, to offer turnkey solutions that maximize cost savings and efficiency. We can deliver under one umbrella the highest quality to our clients by using available resources to provide timely, effective solutions. To reinforce these services, we offer a variety of training options on a customized basis. Ringgold has a proven track record of providing effective management supportive services and has helped secure millions of banking and bonding lines of credits to DBE firms, as well as supporting DBE firms in providing accounting and administrative support that help them sustain and grow their businesses. Our staff includes a talented group of licensed and certified public accountants, certified project managers, and business professionals. We do offer the management assistance for districts 1 through 3. Some of the services that we provide are QuickBooks and other accounting system support, business plan preparation, cash flow analysis, bonding and financing assistance, credit restoration, and of course, much more services. Please feel free to give us a call or email us for more information. With that being said, we're going to go ahead and switch it over to Michelle Ringgold. So please remember to enter your questions in the Q&A, remain muted and with your camera off, and we will answer questions as we go through the presentation.
Thank you, Olga. Yep, thank you so much, and good morning, everyone. And I'm Michelle Ringgold, one of the managing partners of Ringgold, and we'll be presenting today job costing and work in process. So I really appreciate you guys in attendance. Next slide. So our presentation objective today, at the end of this training session, the participants should have a better understanding of the importance of job costing and project costing and creating a work in progress or process schedule. Next slide. So let's talk about a little bit about the importance of job costing. Job costing is the process of tracking the expenses incurred on a job against the revenue produced by that job. Job costing is an important tool for those who are pairing a relatively high dollar value per customer with a relatively low number of customers. For example, building contractors, subcontractors, architects, and consultants often use job costing or project costing, whereas hardware stores or someone that has a high value may not necessarily use job costing. And the real thing about job costing is that, you know, you can look at your financial statements, your profit and loss statement, and you can see overall how the company is doing. The real importance of job costing and project costing is to be able to drill down in those job projects or those specific projects, just to get an understanding of how you're doing as it relates to, you know, what you budgeted or your estimates versus actual costs. Job costing uses accounting software, which enables a number of factors and allows you to analyze the results to aid in decision making. You know, information dictates behavior, so we want the information to be accurate and timely. A job costing report helps you ensure that all costs involved in a job have been properly invoiced to the customer. Estimates versus actual reports compares quoted costs to actual costs and quoted revenues to actual revenues, so that you can analyze any variances between your quotes and your estimates to your actual results. You can then use the results of your analysis to create more accurate quotes when you're bidding on future jobs. You also, if you're looking at job costing and doing large projects, you're able to see how you're trending. And if you know you've used 30% of the cost, are you really 30% out in the field, so that you can, you know, make the necessary adjustments to meet your budgets? Using job costs will allow you to identify the most and least profitable jobs. so that you can focus on the profitable elements and try to make the less profitable aspects of your projects more efficient. It will help you to quote new jobs more accurately and assist in you managing jobs and progress. Also, depending on how you set up your jobs, you can have the job phased out, or let's just say it's the same work, you're a contractor, and you have the same work to do on floors 1, 2, and 3, but you have different crews. So you can actually monitor and measure productivity versus, each cost center. In this example, it would be the first floor versus the second floor. And you may have one team that's producing better than another team. This information will allow you to detect that very early on, and where need to, make adjustments. Next slide. Job and project costing components. So when you're setting up your job and you want to track the job, it's really important that you set up the cost codes that's, going to meet your objectives. There are numerous of aspects to job costing, and you may use many, or in some cases you may use, just a couple of them or none of them, depending on how complex the project is. If you want to set up job costing, we use QuickBooks since that's the most used here with our IDOT DBE clients. You would have to track the costs involved in the job project, and we'll show you, how to set that up. We'll make sure that all costs are, invoiced to the customer. So it's important, if you set up the job costing, that it's set up in a way that when you run these reports, you're able to see, okay, this is my total cost. Maybe I'm a general contractor and I've done, 50% of carpentry work. That helped me aid in ensuring that I bill my customer for 50%. Job costing produce reports showing detailed costs and revenue by job, and it also helps track actual to estimates. And, we have an example of a job costing report, so we'll go over it in detail later on in that slide. Next slide. So it's really important when you're doing job costing or project costing that you understand the different types of accounts, or I should say contracts, and different contracts carry different risks. And also, depending on how your contracts are itemized, you may have to set up your job costing with that in mind, and as well as your invoicing to the client. A lump sum contract is one type of contract, sometimes referred to as sum, where a single price is quoted for an entire project based on plan and for the entire project, and the owner knows exactly how much work in advance. This work is typically invoiced to the customer on a percentage of completion basis. And just so you understand, we deem lump sum contracts, particularly if you're in the construction arena or, even in professional services. If you're doing an estimate and you have an agreement that you're going to build a lump sum, sometimes depending on if you have some issues on the job or the job is underbidded, you could technically go over on price, and a lot of times that may not be honored by the customer. We call those change orders or addendums. So we do consider, and if you're in like construction, a lot of folks like bonding companies deem lump sum contracts as a higher risk because you're agreeing to do a lot of a scope of work for a lump sum price. And if the scope of work is not well defined, sometimes it can be, somewhat of a challenge, and sometimes a lump sum contract may not be the best, particularly when your scope is not well defined. Next slide. Olga, are you able to hear me a little bit better now? Because I was told that I'm going in and out.
Yes, I can hear you better now.
Okay, all right. I just adjusted a little bit. Thank you, Brian. Our fixed fee contracts. A fixed fee contract is a type of contract where the payment and amount does not depend on resources used or time. This is opposed to a cost plus contract, which is intended to cover the cost with additional profit being made. So in real simple terms, if you have a fixed fee contract where you are just agreeing this is the amount of fee that I'm going to charge a customer regardless of the efforts. In professional services, we do have similar contracts. So just to understand the difference. Next slide. Time and material contracts. Time and material, which is referred often to T&M, is a standard phrase in a contract in which the customer agrees to pay the contractor based upon the time spent by the contractor's employees and subcontractors to perform the work, and for material and equipment and things like that, that is used. No matter how much work is required to complete the project, time and material is generally used in projects in which it is not possible to accurately estimate the size of the project or when it is expected that the project requirements would most likely change. This is considered a low-risk type of arrangement. So unlike a lump sum project where I'm bidding out the entire scope and I'm saying, dear customer, this is what it's going to cost you. So even if I misbid it, I am obligated to execute the scope of work under a lump sum contract, regardless if I go over the planned cost. Whereas the time and material, we consider that a little less riskier because sometimes the scope is not, defined, and what you're doing is you're performing work, and it's based on your labor costs, if there's supplies or material and equipment costs. So typically, that's the driver to help create the invoice. Next slide. Revenue and sales. Revenue are often referred to as sales and is the income received for normal business operations and other business activities. This is an important component to job costing and will help you ensure that you are invoicing your customers for each task. So we have an example, but not only do I want to understand the cost from a cost per component, I also want to make sure that I'm billing the customer the cost. And for a lot of complex projects, what will happen is you'll have the cost allocated, just giving an example of a general contractor, and maybe they have carpentry, electric, and HVAC, but if the cost, let's just say for HVAC is $100,000 and they have costs of $50,000, we would want to make sure that if that's 50% complete with the cost, that they're billing the customer at 50% as well. So it also helps us monitor, that we're billing all of the costs related to our efforts to our client. Next slide. Cost categories. A cost category is used to define costs into a category. The most commonly used cost category types are labor, you have equipment, material, subcontractors, subconsultants, and other type of costs. Just think of those cost categories of costs that are directly related to you being able to deliver the product or project to your client. For example, you may want to track costs. For example, you may want to track costs associated with labor. These can be used to itemize and track the specific tasks being performed for each job or project. So I may not want the project to be just, my job costing just labor. I mean, I may have $2 million in labor costs, and I don't want it to just go into one pot for labor. I want to see, if I'm an electrician, maybe I want to see what the conduit pulling would be, or, what my project management time would be. So you can actually break down in job costing the different tasks being performed and compare them to the estimates to ensure that not only are you delivering the project, but you're on track with performing each task and how it was budgeted. Tracking estimates and costs by task allow you to measure actual performance and productivity, and it's really key. Next slide. We have different types of costs, and it's really important that you understand your cost. Direct cost is a cost and a price that can be directly tied to the production or specific goods or service of your project. And a direct cost can be traced to the cost objective, which can be a service, product, or a department. So if I'm a general contractor, some of my costs may be, you know, my masonry subcontractor, the direct material related to carrying out that project. If I'm an engineer, some of my direct costs may be R&D. It may be planning. I may want to segregate, you know, my different levels of staff so that I can see, you know, if I budgeted X amount of hours for, you know, staff level folks versus project managers, you're able to segregate it. It just really depends on your objective and the components of your project. Next slide. And one thing you don't have to go back over, but direct cost typically fluctuates with your revenue, right? So if my revenue goes down, then one would expect that that direct cost will go down too. If I have less projects to perform, then I would expect that my labor would perform. Unlike the next slide here, which is overhead costs, overhead refers to the ongoing business expenses and not necessarily directly attributed to creating a product or service. It is important for budgeting purposes, but also for determining how much a company must charge for its projects, or I'm sorry, products or services to make a profit. Overhead is any expense incurred to support the business while not being directly related to a specific product or service. So it's really, you know, sometimes referred to as our G&A costs, generally administrative costs. It doesn't necessarily fluctuate with sales or revenue. Regardless of what my sales or revenue is, I may have office for my rent, rent for my office, and I'm going to have that rent regardless. So we consider it as a fixed cost. Or, you know, my telephone services in my office, or, you know, my computer services. So, you know, those things that are not necessarily directly related, but I need these things in place to, you know, as fixed costs. So just so you understand the difference. Next slide. A work in progress schedule. This is a document that is meant to define the common components and flow of work in progress, and we refer to it as a WIP. Some people call it contract in process, which is a CIP, but for the sake, most of the times we call it a work in progress schedule. And it is a monthly recap. You know, some folks can do it weekly depending on how large the job is, but typically it's a monthly recap of the progress of the estimate versus the actual cost, billings, and the job profitability. The WIP schedule produces two key financial statement adjustments, which is a revenue and access of billing, which we call underbilling. And we'll go into that when we look at the actual schedule. And then it's a billings and access of revenue, which we consider overbillings. One is reflected on the balance sheet as an asset, and the other is reflected on the balance sheet as a liability. These components are critical to construction contractors for reporting accurately on in-flight contracts. The WIP schedule is the mechanism used to reconcile the timing issues between actual work performed, costs incurred to perform the work, and revenue recognition on payment for services rendered. Next slide. So some of the major components of a work in progress schedule we'll get into our examples. You want to have a job number. Typically you want to list it from oldest to newest, a job name. You want to get the contract amount. This is the amount that is derived from the signed contract. If you have amendments or modifications, we call those change orders. They should not be added unless they are actually approved. Cost that is incurred that exceeds a contract amount, we definitely need to make sure that we get an approval from the client, and it's best to get that cost ahead of time, opposed to doing the work and trying to go back and get the client to approve it. If there's de-scope work, that's considered a deductive amendment or change order, and, that would have to be adjusted as well. But at the end of the day, anything related to your contract, approved change orders or deducts need to be included in the contract amount on your work in progress schedule. It's important to have an estimated cost of what you're anticipating will take from a cost perspective to complete this project. And it should be based on, a solid estimate. Next slide. Estimated profits, it uses a formula, and you subtract the cost from the contract amount. So example, if the contract amount was $100,000 and my cost is $80,000, if I subtract $100,000 minus $80,000, that means my estimated profit would be $20,000. Estimated percent profit is similar, except for one is based on dollar value of the contract and one is based on percentage. And I would just basically take that $20,000 and divide it by the contract total, which is 20%. 20,000 divided by 100,000 would be 20% in the example that I gave. A current percent complete, you basically take the actual cost estimated. This number tells you the project completion based on the cost incurred and the cost that has been estimated. This is where you can tell if the cost on the project is on track or if the cost is going over. For example, a project manager might tell you to bill the contract at 50%, but your WIP schedule says that you are 75% complete and on the cost incurred of this project. So basically what I'm saying here is you've used 75% of the cost, so you would think you can bill 75%, but the project manager and the customer saying you can only bill 50%. This could be a potential situation where cost is going over on a project and it should be investigated. The current percentage complete can never exceed 100%. In the event the cost exceeds the estimate and there is remaining cost, the estimate must be revised based on the project manager's estimate to complete, so whatever they're estimating the total cost to be. This adjustment will decrease estimated profit accordingly. Percentage complete is a critical indicator for the operational side of a business, and often out of balance when the financial side of the business. So basically that's a little, what we mean by that is that if you have used 50% of the cost, you would expect that 50% of the billings would happen. And if that does not occur, then you should really investigate the over and under. So it's a real key indicator. And what will happen is once we show you the actual work in progress, hopefully it'll make sense for those that's on the phone that's in the construction industry or doing work in progress. If you have further questions on that, you can certainly reach out because we have helped a lot of clients set up their QuickBooks so that they can run these reports and understand from a project level how their jobs are performing. It is imperative that project managers be aware of what the estimate is at all phases of the project, and signs of overruns are detected more effectively if budgets for each phase of the project are entered into the accounting system. Next slide. Revenue earned basically is where you multiply the contract amount by the percentage of complete. So if I'm 50% complete on the project and the project is $100,000, I would expect that I've earned 50% on that contract. And this also tells you how much revenue you should have earned to date based on the cost. And we'll go into more details. The cost incurred, this is the number that you get from your job costing module in your accounting software. Make sure everything has been posted for the period and updated for your WIP. So in other words, if you are closing the books for the end of February, you want to make sure that all the costs associated in the month of February has been posted in the month of February in order for these reports to be accurate, and as well as lining up your billing to ensure that it's posted in the correct period as well. Gross profit, subcontract, the cost incurred for the revenue earned, and this will be the gross profit of the project. So for example, if I'm deemed that I'm going to make $20,000 on a project, the example I gave was $100,000 is the project contract cost, or the price to the customer, the contract. $80,000 is the cost, so that's a $20,000 profit. So if I've used 50% of the cost, then from a profit standpoint, I would expect to get 50% of that profit, and 50% of 20,000 would be 10,000. Billings to date. This number comes right from the accounts receivable module in the accounting software. Make sure all the billings for the period have been posted and dated so they reflect accurately. And I just gave the example of the cost being posted in the right period, as well as your billings to the customer being posted in the correct billing. Next slide. Revenue in excess of billing, which is sometimes considered underbilling, and it's the asset. This means that the project has been underbilled and is booked as an asset to the company. This requires a formula to calculate, and basically what it's stating is my revenue earned is greater than my billings to date. So I've earned $50,000, but for whatever reason, I've only billed $30,000. So that will be an underbilling. And basically, that is a red flag. If you're in the industry of construction, or just in general, if you're looking at an analysis on your project or job costing, the goal is to make sure you're billing all of your costs to your customer. And if you have a situation with, based on cost, that you've earned 50%, but the client is only allowing you to bill 30%, that can be an indication that maybe there's an issue with the job. You're deeming that you're 50% complete, but in actuality, you haven't completed 50%. So it's a real critical indicator, and it's one that you really need to understand if you're running a work in progress schedule. Billing in excess of revenue, which a lot of times we refer to as overbilling, is reflected on your balance sheet as a liability. This means the project has been overbilled and will be booked as a liability on the company's books. This requires a what if then statement that basically is saying that based on the revenues earned, I've actually booked more than what I am projecting. So for example, I am 50% complete, so I should have be eligible or to bill 50,000, but I have billed 60,000. And so that could be a number of reasons. It could be that I'm doing better on the job than anticipated. It also could mean that there's a timing issue with the project. But at the end of the day, overbillings is a liability. And it typically, a lot of times, could mean that you're doing better on the job, but you do want to understand why you would be overbilled. Sometimes, project managers on very complex jobs, they'll front load what we call their schedule values. So they front load the billings, and that sometimes will be the root cause of a overbillings liability reflected on your balance sheet. Revenue backlog. This column is the total contract amount minus the revenue earned, and basically it's the remaining portion on the WIP that's scheduled to be billed. Next slide. So I'm going to take a pause to see if there's any questions, and then we're going to go over, wanted to go over all the different definitions, and that way we can now take a look at an example of a work in progress schedule. But Olga, I don't know if there's any questions or not.
There are no questions right now, Michelle.
Okay, thank you. So this is a work in progress schedule. As you can see, we have the job number listed here. We have the job name. In the first example, the contract value, again, is a executed contract, including any addendums, amendments, or change orders, rather adds or deducts, would be $500,000. The estimated cost here is $425,000. So to get the estimated profits, all you're doing is taking the $500,000 minus the $425,000, and that's how you get the $75,000 in profits. In order to convert that profit into a percentage margin, all you would do is take that $75,000 and you would divide it by the $500,000, and you would see that that comes out to 15%. So if someone asked you what was the planned profit margin on this project, you would be able to answer it by 15%. The current percentage of completion, it is driven by cost, and that formula is simply taking the cost incurred. So if this is an example of a September 30th cutoff period, so I will run the cost for my project, and that cost is $150,000. And basically, if you took $150,000 and you divided it by $500,000, that's how you would get the 35.29% as the percentage completion. So the percentage of completion is driven by cost. This is what I plan on the entire project to cost me. This is where I'm at as of September 30th. So I've used 35.29% of the cost. And then what basically happens is that 35.29% is used to calculate the other components. The next component is the revenue earned. So basically, if I've completed 35.29%, I would then just take that number and multiply it by the contract amount, and that's how I would get the revenue earned. $176,471 is 35.29% of my contract value. The cost incurred comes straight from the system of all the costs that's been incurred on this project, whether that's labor, whether that's material or subcontractor. I cut the WIP schedule off of September 30th. You always want to run the reports in QuickBooks or any software from the beginning of jobs, because if you're a larger company that deal with multi-years, the work in progress schedule can be a multi-year duration. So it's important that you start grabbing the cost from the beginning of the job and you cut it off at the period that you're reporting on. And in this example, it's September 30th. As far as your gross profit margin, again, you're taking that 35.29% driver and it multiplies it by your estimate. And that's how you get the total estimate the total gross profit margin that's going to be recognized in your financial statement. So the estimated profit is the 75 that you're expected to make over the entire period of the job. But what's being recognized in your accounting system as of September 30th in this example would be 35.29% of that profit margin, which is the $26,471. The billing to date is a direct input, again, from your software showing that I've billed $125,000 to date. That's what, was approved by my customer. That's what I've billed. But based on 35.29% of cost being used, if I take that and I multiply that by, what's earned, that's how I got the $176,471. And if I've only billed $125,000, what's happening is the formula for the underbillings or revenue and access is basically taking the $176,471 and subtracting the $125, and basically it's indicating that I am $51,471 underbilled. So I want to make sure, as a project manager, I want to investigate that to find out why I'm underbilled. Maybe it was just timing, and I wasn't able to get maybe a subcontractor on a pay application. Or maybe I'm not making 15% on the project. Maybe I'm only making 10%. But you do need to understand if you're running a project and you're using these formulas, and we can supply this template to you, why I'm underbilled to ensure that it's not a situation where I'm not performing based on my planned estimate. Revenue and billings and access of revenue is really a liability, and that's in the second example, which we'll go through. But then the revenue backlog is basically taking my earned revenue and subtracting it from my cost and just saying that I have revenue backlog of 323. A lot of times people will just say, my revenue backlog is the contract value minus the billing to date, but that's really not actual. It really should be your revenue, earned minus the contract value. And that's what you have remaining. So it takes in consideration profits that's already picked up on the project as well, considering the amount to the customer includes profit. So the next example, I'm not going to go through, all of the items, but just more focusing on the difference. And the difference is the next to last column, which is the billings and access of revenue, which is a liability. So in this example, it's a 10% profit margin project. We understand how we got to the 10%. But if you take the total cost of $650 and you divide it by the estimated cost, that means that this project has used 72.22% of the cost. And provided that the estimate is correct, you would just take that percentage and multiply it by the contract value, and that's how you get what you're entitled to for revenue recognition in your financials. So then it takes a look again at the profit margin to get what the actual profit margin based on a 72% completion is. And then you have your billing, which comes out of the system. I billed the customer $825. But from a cost perspective, I'm really only entitled, assuming that the estimate is correct, to 72.22%. So the revenue earned should be 722. So if I take that 825 and I subtract it from the 722, that's how I get the overbillings of 102,000. And what does that mean? That means that, I've been able to bill the client at a faster pace. And if I'm truly making 10%, then it could just be timing where I front loaded maybe my scheduled values and it'll catch up. But it also could mean the opposite as the example of underbilling, and that is that I'm doing better on the job. So those are the different components and, for construction firms or even professional service firms that are dealing with large projects and trying to get a handle on how they're doing and not waiting until the end of the project to dictate if there's a problem or if I'm on track. This is a tool to help you manage the jobs, on a more, real-time basis. Next slide. Okay, so this is an example of a job project cost report. This is a professional service. Can you slide back one more over just to make sure I'm not missing a slide? I thought there was one more. Go back one more, please. Okay, so yeah, all right, so we did advance. Okay, so the first example is a job and project cost report for construction. And basically, you can set up your cost codes in QuickBooks. If you're using QuickBooks or any other system, if you need help with this, we can certainly help you. This is an example of a construction firm job and project cost report. You can see the different cost codes. The examples we have here is, plans, building permits, the different tasks, masonry, concrete, demolition material, et cetera. So you're setting up the job costs on the components that you want to track and manage to ensure that you're on track. So the total estimate of the project from a cost perspective is $800,000. And you break out that $800,000 of the different costs that you anticipate spending for each task or component within your job costs. And you can see those are broken down. Gross profit margin, a lot of folks that just have that flow. I mean, you could break it out per description or item number, but typically even our larger clients typically just have the gross profit margin and they just track it on a totality versus the individual level. But you can break it out. Billings to date can be broken out as well, but in this example, it shows the billings to date, it shows your costs to date, and then it shows remaining costs. But then if you take a look at the cost components of everything, although overall the job is 50% complete, on the planning, I've used, an example. It gives you what percentage. So this is the remaining percentage. So if it's 1,500 I've used, that means that I'm 21% complete on the project and so forth. So, if I'm only 21%, that's fine. But, I probably would look into that considering the entire job is 50% complete. Or, those jobs where, the material was delivered, I've used 67% of the project, but, just understanding and making sure that the actual is in line with the, the actual estimate and that you're on track. So in this example, we've used 50% of the cost and we bill 50%. And this just kind of itemize it and see how you're doing on a line-by-line item, just in case there is an issue. I mean, you may have used, 50% of the cost, but you're only showing that you're 25% complete. So you may want to, on that particular line item, do a little investigation. So this is meant to dictate, behavior and to give you the tools to go out into the field to identify if there's, any challenges that may need to be addressed instead of waiting until the end of the project. Next slide. This is an example of a job costing report for professional services, similar to how we set it up, similar to how I've seen architects and engineers set it up, where you may want to say, I want to know how much it costs for the research and development piece. I want to know how much it costs for my planning. How much efforts did my staff put in? How much efforts did my management? We have to issue a report. How much efforts is on that reporting? So therefore, when you put these cost codes in, you also put them in on your payroll side, and folks will, instead of just hitting a lump sum to the project, they will hit to these different components so that you can see, how you're doing. You've used, in this example, over 60% of the you use 40% of the cost, which leaves the 60% remaining. So you would use that to see, I've used 63% from a management standpoint, am I going over or is it just a timing? So same concept, just that, it's different cost codes based on the objective in your business and your projects. Next slide.
Okay, so that concludes our for job costing. So now we'd like to open the floor up for any questions. So if you have any questions, feel free to unmute yourself or go ahead and enter it in the Q&A. Thank you, Michelle.
Thank you. And if you think of any questions later, you can always email us if you need a copy of the work in progress template. If you're in a situation where you don't have your project costing and modules set up in your accounting system, we can assist with that. So thank you.
Okay, so I'm going to go ahead and go over the next slides. Once we conclude with the slides, we'll go over to see if anybody else has any more questions. And as Michelle said, if you have any additional questions after this presentation, you can go ahead and email us. My email is on the chat and you can contact us. Okay. Okay, so we have a question,
Olga. I do see one question. Okay.
Okay, it says, if you undercut yourself during a contract, are you not able to submit a change order?
So I guess it means if you undercut, I'm assuming that means that if you bidded the project on a specific scope and you told the contractor, let's just keep it easy, you're coming to, you're doing electrical work, and you indicated that it was going to cost, I don't know, $1,000 to install 20 outlets, which is $20,000. And then you discovered that instead of $1,000, it's going to cost me $1,500. Typically, that's not a scope change. And if you've made a mistake on your estimate, I mean, you certainly can talk to your customer, but the customer is not obligated to give you a change order because you misbidded, a scope. But on the other hand, if you bidded an example of an outlet, but then maybe there was, you get into the wall and find out there's some other issues or conditions that were not added or included in the scope, then that may be a legitimate amendment or contract adjustment.
Thank you. Okay. Okay. All right, let's continue with the available resources. So the Building Blocks of Success workshop series will continue through April 2024. You can register via Eventbrite. The address is right there. You can follow that or click the QR code. Our next workshop is our overhead rate calculation. It will be Thursday at 10 a.m. Just a reminder, if you haven't signed up for it, I'm not sure if we're all filled up, but it is a very popular workshop. So we look forward to seeing you on Thursday. It will be, the presenters will be Megan Moldenhauer from IDOT and Michelle Ringgold. It's a great workshop, very popular. Here are our March workshops. Here's the flyer. We will have a series of QuickBooks and accounting software workshops, so you can register at the website below, the website there. And here are April. We'll have a series of, the series is called Construction During and Post Contract Consultants. Okay. If you have any questions before, you can submit questions in advance. Just click the website or scan the QR code and it'll lead you to this page. The workshops are also on YouTube. You can visit youtube.com/@illinois. You will need to go on the consultant playlist. And once you get to the consultant playlist, you'll be able to view past workshops, and then eventually this workshop will also be on the YouTube channel. So if there's any workshops that you've missed, say we did a couple last week on accounting practices and you were really interested in attending, but for any reason you were not able to, you can go ahead and go on this YouTube playlist and play it and watch it. And there's all the different workshops are on there. So you can scan the QR code or click the link in the chat to provide feedback about this session. And then as a reminder, we will send follow-up email, including recording of event, presentation, links to resources and programs, any upcoming workshops and events, contact information for OBWD staff, consultants, and contract compliance officers. So if you have any other questions, you can contact the Supportive Services or Bureau of Small Business Enterprises Office of Business and Workforce Diversity. The email is there and the number. Let's see if we have any more questions before we close out. Can you receive certification for any webinars you are attending? Brian?
Sorry about that. We don't have anything as far as a certification process for that. We can provide proof of attendance, but nothing above or beyond you know, any type of certification or anything.
Okay. And then another question is, does IDOT recommend using AIA forms?
I think I can take that. I think that depends on the contract, right? I think different contracts carry different things, but I know that a lot of larger construction or, you know, road type projects, sometimes it can be, you know, a lump sum project that's broken down through a schedule of values, and you can use the G702 and G703, which is the AIA form. But it really depends on your contract, because sometimes there's time and material type contracts, and sometimes there's unit pricing contracts. So it really does depend.
And I believe that is all for the questions. Like we said, if you think of any questions, feel free to reach out to us. Our information will be on this PowerPoint. Again, my email is on the chat if you need to reach us. And again, we'd like to thank you. Thank you, Michelle, for this great workshop and a lot of useful information. We really appreciate it. And with that, we'd like to end today's workshop.
Thank you, Olga. Thank you, Michelle. And we hope to see you all at Thursday's workshop. Have a good rest of the day.
Thank you.
Take care. Bye-bye.